Good evening, guys. My name is Kariuki, and I represent a company by the name Ace Capital. It's still a financial intermediary, but it's not from the mainstream banking. So I'm here just to share a few things that I've come to learn in the industry, especially when it comes to what we normally look at as financiers. And I've heard about, just listening to guys around, I think I'm very excited, especially when I hear the kind of innovation that is going around. And it's pretty exciting to know that there are quite a number of ideas that are coming up which are going to turn around this country in the next few years. I think the challenge would be then, how do we structure ourselves to get that financing? And many of you at your stage, some are startups, and we've heard from the banks, they really don't look at startups at the moment. I think the challenge for us as financiers is to also innovate products that fit in the startups or the early growth companies and those who do not fit the traditional banking segment. So I'm just going to share with you guys about what we normally look at. Some of you have heard some of the things that have been said here, but I want to distinguish between requirements, okay, the requirements, and what the financiers look at. And financiers may fall into the banks, the venture capitalists, the angel investors, private equity funds. There are quite a number of investor options, the financial options that are available around. And for us as entrepreneurs is to really understand the objectives of the financial and their own personal objectives, and then you match the two. Okay, so I'm just going to be sharing just a few of them, and probably later on we can interact and just share some ideas that are out there. I don't want to talk about Ace Capital much, because we more or less offer similar products like in the banks: invoice discounting products, LPO financing, working capital loans, insurance premium financing. But our terms are slightly different. Reason being, I was a business person and I was a banker, and I saw the gap which many entrepreneurs face that do not meet. Some of them are how to structure your collateral if you don't have one, how to structure yourself so that you meet the requirements of financing, which probably traditionally banks do not look at. Okay, are we together? Okay, so one of the key things, I'm just going to share some things you've heard about what financials look at, but I'm going to look at it slightly different. One, of course, we've heard from our friend from KCB is about a good business plan. We've heard about that. I think for early enterprises and people who are innovating products, this is where you need to spend a bit more of time and resources in developing that business plan. Okay? You need to understand the kind of product that you want to offer and develop a good business plan. And the main thing here is, I would wish that many of us would invest in an expert to help us structure our business plan so that to suit the needs, your needs, and also to match with the potential financials. You need to have, within the plan, you need to demonstrate the potential of your product or service, how innovative it is, how you're going to be able to repay any monies expected. Okay, we look at the business model, the structure of the business model. There are very many experts who can assist you in developing a convincing business plan that even without collateral, it can attract one or two people with money, because right now there are quite a number of individuals or groups of people who are the monies. We know that chamas in Kenya are very liquid right now. So instead of just focusing on traditional methods of financing, you can develop a business plan that can attract even chama groups, private people, middle class right now, they're having a lot of money, they don't know what to do with it. And with that, you don't need per se collateral. It is how good your business plan is. And we can share with you some of the ways that you can structure that business plan. Okay, another thing that we also look at in your business plan, I want to dwell a bit more on that, is how it impacts society. Okay, if it has a good impact on society, especially for social enterprises, which I think CSC has quite a number of clients, that is a plus. Another thing that we look at is the uniqueness of your idea. You cannot come with a business idea of opening an M-Pesa shop. That one has been done. There's nothing unique about that, right? Yeah, you need to come up with an idea that blows our minds. I've had quite a number here which are quite unique, and how you can demonstrate that it's going to make money. And even if it's a social enterprise, there's always, I've not heard of any enterprise that is not making money to some extent. It should make some money and make some return for the business owners. So the uniqueness of that business idea is something that you need to demonstrate within that business plan, and that is very critical for a financier to look at your business idea and how it has an impact on the people around the community and how it makes money. It's not also the idea, it is also the business model. Are we together? The uniqueness of your business model, how you intend to penetrate the market, how you've structured yourself, which target audience or target customer you need to address. Some of those things are something that an untapped market that no one thought about, that can tap the brain of a financier and say, I want to get into this. Okay? Sometimes you may decide that you're not going to, in your idea or your company, instead of raising collateral, you can sell shares within your company. Instead of approaching a company and say that I want money, I have a title deed, you can hive off 20% and raise capital for your business. In fact, that is the cheapest way to raise funds. But that will be determinant on how unique your idea is, how convincing your business plan is, and the level of innovation of that product. Okay? Another thing is how scalable your business is. Do you understand? How scalable? Can it grow into different regions? Can it be replicated? Yeah? Is it something that can be expanded, or it's going to reach a place where it stagnates in the market? So scalability of your business is something that we look at in your business. One of the other things, especially you guys, you're in innovation, is about copyrights and patents. I think key things, especially those people who want to come in a big way, they want to see that your idea is protected, that not other people will come in and replicate and move with it, and you will kill your idea there and then. So there is an aspect of protecting that idea. If it is protected, then you have the ability to attract big money and very cheap, because no one is going to replicate it. It's not protecting the whole idea, but even aspects of your business, of your idea, can be protected, such that it's not easily replicable. Yeah. So those are some of the things that we also look at, and my advice, especially to us young innovators, is to, as early as possible, try and protect that idea. You can go to KEBS. I think it's KEBS that has that service. Exact things, and you protect that idea. I'm sure with CSC they assist with that. Yeah. Something soft here is the commitment and passion of the entrepreneur. The passion of an entrepreneur says a lot. You can find an entrepreneur, he comes and shares an idea with you, but lacks that passion in them. And passion is backed by the technical know-how, people who are resilient, they've been in that industry, they've thought about it, they learned about aspects of that industry. That is something that we also look at. An entrepreneur must be willing to share information with the financials, pertinent information, not specifically to that idea, but relevant information. Sometimes we ask questions that will help us see whether it's someone we want to partner with in terms of financing, or someone who's hiding quite a bit. If you hide quite a bit, then I'll be more scared and skeptical to partner with someone and put my money in there. There's something called hard capital. Do you understand what hard capital is? Hard capital is your input into the business. What level of input have you put into your innovation or in your idea or your business? If let's say you have an idea, you've started up providing a certain product, how much input have you put into it? Have you put in a level of money in it? Have you developed, someone talked about a prototype, yes. Have you developed a good prototype that you have tested in the market? That shows a lot of commitment, that you're not in there for testing, then you go to a different line. One of the things that we've seen with Kenya, unfortunately, is what we call a deal mentality. A deal mentality is where a guy anaangukia a deal, does it, the next thing he's doing something else, he's gotten a tender from the government, supplying stationery, he's run to do tires, and he's doing from one deal to the next. That is a killer to a financier, such that you cannot track the person where the line of expertise is. So it's important that you establish one line, grow with it, be resilient with it, and demonstrate leadership in that area. That way a financier will be very comfortable in dealing with you and putting their money there. Another thing is a realistic exit plan. Okay, the reason I'm talking about a realistic exit plan is that for me as a financier, I want to come in and put money into your idea. For how long? If I'm not buying shares into it, or even if I'm buying shares into it, how do I exit? You must demonstrate that in 7 years time you're going to expand your company and sell off shares. That way I'm able to exit with my money and move somewhere else, or in form of an IPO, selling off the business to other people, maybe your partners or some. You must demonstrate that you have an exit plan in place. That is very attractive to a financier. Okay, and we have examples. Home Africa, okay, they had an exit plan, and you see they raised money from people, from friends around. They had an idea of building homes. 4 guys invited 48 people, all the 48 people, then they rose to 64 to 128 people, raising 2 million, between 2 million and 5 million each per person. They had a good business plan, and all of a sudden they had a lot of capital. And one of the things that they had was an exit strategy, that they're going to raise an IPO. They're going to enter into the stock exchange. That's exactly what they've done, and people bought into it. Either that or mergers or acquisition. Resolution Health, now is Resolution Insurance. They had an exit plan. If you come in, strategic partners come in, put in money, later on, now it's Resolution Insurance. The people who had come in, some of them are going to exit. So you need to demonstrate that within a business, in your business. All these can be covered in a business plan. Okay. I don't know whether this, because I presume many of you are being incubated here, so I presume 50% or are innovations, early startups. Is that right? Okay. Now, traditionally, maybe banks may not look at and not able to raise all the money requirements that you have. All right. For social enterprise or innovations, if you have your requirement is $500,000, can you structure it in a different way, a structure of your balance sheet, such that some can be financed by the bank and others by different people? So it's the way, the uniqueness of how you structure yourself that can appeal. Because if your idea, I can only put in 50,000 shillings, but you need 100,000, then I'll be able to finance the 50,000 shillings, and the balance can be catered by a mainstream bank, because probably you can raise a little bit of collateral. Okay, so there's an innovative way you can structure yourself that can attract different investors and to come and meet your objectives. So it's how well you structure yourselves. And now again, I've said there are many experts who can help you. What we fear most is paying experts to do the first initial job, especially when it comes to the business plan. I think that is one place where, as early entrepreneurs, we need to spend some time and put in an expert. An expert can come in on full-time basis, part-time, a friend, okay? And that's why another thing that we also look at is your networks. Those are not traditional things that banks look at, but some of us private people, we also look at your networks. A good name. Who are your friends? Who are your networks? That can stand in as guarantors, not per se to write down, but I know that Karani here, Karani is the name, yeah? He has a good network of people that I have associated him with, and he's not willing to break that name. Unfortunately, Kenya, we are not good with that, but those are certain areas that we also look at in establishing whether we are going to do partnership with entrepreneurs. I don't want to bore you much with some of these things, but I hope I've offered a few insights into how probably we can structure ourselves in future. But again, I must appreciate the level of innovation. The challenge is, even for us financiers, the banks and the like, to develop products now to suit startups, because if we don't support startups, I think that we're going to kill very many ideas around the country, and we badly need those ideas. Thank you very much. Any questions?